Our next speaker is Addison Snell, CEO of Intersect 360. Who's going to be talking about the new HPC. Addison, good morning. How are you?
Hey, Brian, thanks very much for having me. Always happy to be here with the HPC AI Advisory Council. And I have got some pretty cool updates from our newest research that I get to present here, and pulling those up now. And hopefully I'll have time for some questions at the end. April is always a funny time for us to do a presentation because it's right when we're on the cusp of releasing our newest market model and forecast. So I can give some hints about where that's going, but I'm going to mostly base it on highlights from our newest end user studies. I've talked a little bit about software environments at previous HPC Advisory Council events and going back to Supercomputing 21, but I'll touch on it here for anyone who hasn't seen that. We've also completed our slide deck for clients on our technology adoption survey for HPC and AI. And then we've just now have in the door our budget map survey that's annual. And I was specifically asked to bring in something from that around supply chain. And we've done a quick analysis, and I'll have that here. And I will wrap that up into what it means for the HPC market last year, this year, and into the new 5-year forecast. Although we haven't quite released those numbers yet, you've got to give us another couple of weeks to finish that and get it out to our clients. And I'll give a quick update on our Winter Classic Invitational Student Cluster Competition that's mostly been driven by Dan Olds, our Chief Research Officer. So I mentioned these end user surveys. Software environments goes back to the last half of 2021. Operating systems, middleware, developer tools, and 11 different application domains. I'll give an overview of that. And then our newest HPC AI technology adoption survey, that gives us, we used to call this site census, but it's really focused on technology adoption on a lot of different areas that we see in transition right now. I'll give a few highlights from that, and the full results of that are now going out to our clients. We have just completed the budget map survey, as in the last surveys came in earlier this week. Dan did a really fast job on the cleaning of that so we could get a couple of tables into this, but we looked not only at the budget trends and allocations, which we do every year, but also things like CapEx versus OpEx, on-prem versus off-prem, and certainly the effects of supply chain disruptions and what they meant for high-performance computing toward the end of 2021. Coming up, we roll major surveys about once a quarter. The next one's coming up will be an in-depth survey on AI and machine learning and where's the overlap with hyperscale cloud and high-performance computing, with the kinds of applications, the kinds of frameworks. Really let us go deep dive on AI. And I'm interested in particular on where it is overlapping with HPC and where it's diverging also from HPC. That'll be interesting to take a look at. And then we really want to do a deep dive on storage and data management. This is a good one for us to touch base on. It really fuels a lot of investment and is really linked to performance in a lot of ways. So we want to get a deep dive on storage and data management before we get back around to technology adoption survey again by the end of the year. HPC software. The 11 HPC application domains, which are listed there, biosciences, business analytics, chemistry, et cetera. I'm not going to read them all. Those full reports are now all up on our website and have been delivered to clients. We have 3 more written reports pending publication. We've got to go through final editing, and those will be on operating systems and middleware, on the developer environments, and a particular report on machine learning and AI. We look at all kinds of things in each of these domains: typical and maximum job scalability, how much affinity each application has to cloud in terms of what proportion of the time it runs on-prem versus cloud and what the mix is there, how scalable they are on different processing architectures by domain, and how much incorporation of machine learning we've had. Greg set me up for this. I don't know if he knew that I already had this chart in here. I was glad I had it at the ready. Really, the biggest thing I want to look at on this chart is the transition from CentOS to Rocky. Now, Greg was talking about CentOS being more than half the market. I think if you took Rocky out and go, I was impressed how much Rocky Linux already showed up in this survey from a couple of months ago. But if you took Rocky out and you were looking at public sector in particular, that's where we see a higher proportion of CentOS. It would get up toward those levels that Greg was talking about. Red Hat does very well in the commercial markets. And then there's just so many others out there. We find SUSE, we find Ubuntu, we find Debian. That other sliver, there's not much in that. First of all, you notice this is all Linux on here. That other chart, it did have a Windows in it. Someone mentioned Windows. There's also a few other Linuxes out there, like Cray Linux showed up in the other. We didn't find any Unixes this time around. In previous surveys, we've still swept up some HPUX or Solaris, AIX, IRIX, and the like, but we're not catching those in our survey net as often anymore. It's almost a full transition now to Linux environment. And CentOS, as Greg said, is the most common. So we'll be monitoring this to see how much of that goes over to Rocky, how much stays on an unsupported CentOS, and how much goes to other types of Linux distributions. One of the major trends, and I just put out a tweet on this prior to the start of the conference today, has been ISV versus open source versus in-house. And we have seen a trend toward more in-house developed software overall over the years. It's like been not sudden, but steady year after year after year. That has been fueled by successive trends in analytics and machine learning, each of which pushed more in-house development. We've also seen Python really emerge now as a major language for HPC and AI development ahead of Fortran has diminished, and Python is really now a top tier language along with C and C++, and Fortran's really moved more over into maintenance mode. That has been a long, slow, but undeniable transition, and Python is now one of those top languages. And notice how commercial HPC in particular has the highest proportion of in-house developed applications. Analytics really pushed that quite a bit. They also have more commercial ISV applications. That's going to be particularly in the engineering dominated areas, your CAEs, CFDs, EDAs. Those have higher proportions of commercial ISV. But don't forget things like finance and oil and gas, where you see tons of in-house development, and those are commercial as well. So it would be wrong to just say commercial equals ISV. It's where you have the highest proportion, but there's an even higher proportion of in-house application development. And this is that 10 plus year trend that I'm talking about here. We've been doing this a while now as analysts, and here's the mix of in-house versus open source versus ISV software, 2010 versus today. And you can see that in-house proportion going from the low 20s to the mid 30s. That's a big increase. Open source stays about the same, a little more open source, but the big about the same open source, but the big decrease is in the commercial ISV. And what we're seeing is this is usage, not revenue. It doesn't make sense to talk about revenue for in-house open source. The ISVs are still making about as much money as they were before, but it's getting concentrated in fewer users and getting more expensive around scalability, having to do with multi-core, many-core, accelerators, cloud. All of those things do drive more ISV revenue proportionally per usage, but it's on a declining user base. We did look at typical and maximum job scalability. Now with HPC, we tend to think of these very large clusters and all, ultra scale or going up to supercomputing levels of scale. But it's easy to lose sight of the fact that most jobs are run on only a couple of nodes. Typical job scalability for half of applications out there is 1 to 4 nodes. And in fact, I wish we had separated out one node from 2 to 4, which would give us a sense of single node versus multi-node scalability, which is relevant when it comes to use of MPI. And future surveys will provide that additional granularity on this question. Nevertheless, when you get to maximum job scalability, you do get more than a quarter of applications going at over 32 nodes and up. And we look at this by domain. The domain with the greatest scalability out there, weather simulation, weather and climate modeling, that's where we do see more typical jobs and higher degree of maximum jobs that are quite scalable. So this does vary quite a bit depending on what domain we're looking at. Top applications. I just picked one to show here. This is biosciences. No surprise that variations of BLAST are the top 2 applications here. But the big thing I like to point out is the long tail of applications that we see in biosciences. And we have this available for all 11 application domains. It takes out all of the in-house applications, of course, because it doesn't make much sense to analyze those other than a big block and say they exist. But then they largely have all n values of 1. Not a lot of companies run someone else's in-house application, so those are analyzed as a group. Cloud affinity by each of these applications. We can ask, all right, for that user for that application on a 7-point scale, where does that application run from all on premises at one end of the scale to all cloud at the other on a 7-point scale. And then the middle is like about even. And what we find is that if we add up all roughly 2,000 individual application responses in the survey, this is what it looks like. 84% of the time that application by that user is being run completely on-prem. 1% of the time that user is running that particular application all cloud. And the other 15% of the time is some mix of hybrid. The top domain for cloud affinity, where we see more cloud than anywhere else, business analytics. Now that has a high degree of tie-in to enterprise, which has a lot more pull through to cloud. But these hybrid clouds are becoming more and more common. And as I'll get to in other surveys that we had from the year, get myself a little more light here. We are seeing a big uptick in cloud from last year, 2020 and 2021, both hugely explosive growth years for cloud. And I will come back to that further in this presentation or very soon. Processor architectures we also looked at. This is by domain, and I picked scientific research domain here. We looked at the 6 most commonly used processing architectures in our surveys: Intel x86 CPUs, AMD x86 CPUs, ARM CPUs, NVIDIA GPUs, AMD GPUs, and FPGAs, and asked users' perceptions of how well applications in this domain scale and perform on each architecture. And you can see this range of, on this chart, left is good, the blue ones, extremely well down to extremely poorly. And the best ones, of course, are Intel x86, AMD, and NVIDIA on this chart. But the big thing to look at is how often people say don't know, because you can get something like ARM, and it looks like it's doing okay. It's nearly 50% positive, but 84% saying don't know. Well, that's saying I haven't looked. I haven't, I don't have any experience with it. We don't know how well they perform on ARM. Well, that's a general lack of awareness there that's hitting ARM, AMD GPUs, FPGAs, and even NVIDIA GPUs in this domain. This is going to be very different by domain. But the analysis of that don't know column is pretty important. What we have seen is that AMD is doing pretty well in terms of perceptions, taking things over from Intel, and NVIDIA GPUs by and large do very well as well. And we'll take another look at that going into our technology survey, which I'm going to give some highlights of here as well. So that's available, this chart, in all of those different application domain reports. And then finally, one chart on AI engagement. Here's 3 different levels of AI engagement, looking at the start from the bottom. AI and machine learning are separate from our HPC initiatives and applications, which is to say we're doing it, but it's really different from HPC. I'm doing some kind of analytics or other types of workloads. And that gets about 50% traction on that idea of people agreeing with that notion of, yeah, we're doing it, but it's separate. And then a different 50% or a slightly overlapping 50% are using machine learning for pre or post processing of high performance computing applications. So it's HPC adjacent in a sense. And then there's the third level of integrating AI and machine learning into HPC applications, which you can think of as like an AI augmented HPC. That's getting, now up to the high teens of people saying they are doing that, definitely, strongly agree. And then other people, and then another, you get up to 35, high 30s total, who at least positively agree with that sentiment of going toward AI augmented HPC. And we're going to monitor this over time also. Top most common machine learning frameworks: TensorFlow, PyTorch. Not a surprise to see those on top. And PyTorch, by the way, I mentioned Python earlier. There's a tie in there with PyTorch. Okay, I did want to definitely get to the HPC AI technology survey. Here are some of the top headlines. I'm not going to go too much in depth on this survey because we've only just finished the overview slide deck to go to clients, and we would like them to get it first. But I did pick out a couple of headlines and also a few high-level charts that I think are worthy of discussing here. And then at future HPC AI Council events, I'll get into a little more of this in more detail. AMD CPUs are certainly continuing to gain on Intel in the installed base, and accelerator usage is continuing to climb, particularly with GPUs, although we're seeing some traction with AMD GPUs there now as well. But NVIDIA has become so dominant here and integrating more of the technology stack that users are now associating NVIDIA as the second most common system vendor behind Dell. Like you say, whose system, what brand system is this? People will say it's an NVIDIA system, even if technically maybe it came from someone else, because NVIDIA will say, well, we're not a system vendor. We sell through our partners. That's not how users are perceiving it now. Users are saying, no, this is an NVIDIA system from NVIDIA. And that is becoming more common. So Dell number one, then NVIDIA, then HPE in order of where people perceive their system as coming from. That's not going to be exactly the same as we publish the market shares, but it is nevertheless very instructive in terms of how end users see their systems. This chart I will get to. 16% of users, HPC users, find moderate or major performance issues with their HPC systems. And I'll show a breakdown of some of that. And we have, I'm not going to do this whole chart, but we look at satisfaction gaps where we take a look at a bunch of different features or criteria of HPC systems and start looking at, say, CPU performance or IO performance or interconnect, how important are those to end users on a scale of 1 to 5, and how satisfied are they on a scale of 1 to 5 with the available solutions? Those are each interesting questions in their own right, but the fun thing to do is look for what we call the satisfaction gap, which are areas of relatively high importance paired with relatively low satisfaction, and what areas have the biggest gaps there. And consistently what we've seen over the years, and is still true today, is IO and storage speed is the biggest satisfaction gap that's out there, that IO bandwidth problem. That's the area of highest importance relative to lowest satisfaction, the biggest gap between those scores. Luster has opened a lead over GPFS now. GPFS is still, or I should say IBM Spectrum Scale is the proper brand. That's still the number 2, but Luster is opening a lead there as the most common parallel file system. Other things like BGFS, a lot of people talked about it. It got a lot of trial, but not a lot of broad adoption. And we look at all the other ones that are out there. We've got data on PanFS and Weka and Ceph, but really the big 2 are going to be Luster and GPFS, and Luster has now taken a bit of a lead there. And as I keep saying over and over, cloud computing and another major growth year. We touch cloud in every survey we do. So believe me, we look at it every different way. And in this case, it's around technology adoption and how much cloud there is. And we measure that year over year. And it has had a major growth year, particularly among commercial HPC users. And all of that data goes into our market sizing and forecasting. Okay, I promised system performance versus expectation. 16%, as I said on the previous chart, report moderate or major performance issues. And that's the pie chart that you see there. Only 44% said no performance problems, 40% slight performance problems, 13% more than that, and then 3% major performance problems. And then of those that are in the top 2 categories there, that 16% that had the moderate or major performance issues, we broke those down a little further. First of all, how far below expectation are you getting the performance? And we showed that in a table, as well as tried to rig up a radial chart that would make some sense there, where 14% so I'm breaking down the 16% now. Out of that 16%, how do they break down? 14% are saying it's up to a 10% shortfall. Most of them are falling into that 11 to 25% shortfall. But then that's still saying half of them or I should say 40% are getting more than a 25% shortfall in their performance, and 14% are saying, it's worse than half of what we thought it would be, or what our expectation or projection was of this system. And I think that's pretty significant. Also, out of this 16%, then we start looking at where do those performance shortfalls come from? So now I'm taking those performance shortfalls and asking people, what are the sources of underperformance? Now you can check more than one here, but the 2 biggest issues are, one, IO contention, which I just mentioned, or the IO is too slow. This is not exactly the same as that satisfaction gap metric that I was just talking about before, but is related to that. IO is coming up number 1. The other one is I've just got a mismatch of what hardware goes with which application. Now, this is important because it also speaks to the growth in cloud. One of the hardest things for end users is matching an increasingly diverse set of workloads to an increasingly diverse pool of processing elements that I might be using. And when I get a mismatch, I get a shortfall in performance, and that has more people turning to cloud for specific workloads or configurations that they don't have on premises. So that's one way in which cloud serves HPC and AI well, is if my on-prem infrastructure suits most but not all of my applications. I can then take some of my applications or workflows and move those to cloud to instances that suit them better. So that's the story getting told here. Usage of accelerators. I don't want to give away the whole farm, and we'll have a full report on processing elements, but this was some of the coolest stuff, and I thought we'd show some of the overview charts around accelerators here. First of all, 81% of HPC AI users now have accelerators installed at least somewhere, right? That's not to say that's all of their nodes, but 81% of users have at least some accelerators somewhere. And then the other 19%. So that's the dark blue versus light blue. But then I can layer on top of that in gold, all right, out of the people who have accelerators, what percent of nodes? 36% of nodes have accelerators among those who have accelerators. So that if I take the 36% of the 81%, that's now 29% of all HPC AI nodes are accelerated at some level. Then we can look at how that's projected to grow, because we also asked about projected future. Now, we didn't do projected future of accelerators installed or not, but we looked at the projected growth just in the number of nodes, and just that on its own would add another 6%. And when we say future here, we're asking people to look 2-3 years out. That would get us up to 35% of all HPC AI nodes being accelerated. If we break that down further, taking that 29 growing to 31% of nodes. First of all, accelerators per node in broad usage. We also looked at some usage, but just look at who said, yeah, I've got that in broad usage today. This is new. The biggest peak now is at 4 accelerators per node. Now, this is almost all GPUs, but I try to say accelerators because it doesn't strictly have to be GPUs. 4 accelerators per node is the most common. There's still a lot of 1s and 2s, but getting to where the biggest peak is at 4 is new. That's getting to denser and denser configurations, which have implications for power, it has implications for cooling, and it has implications potentially for what I talked about before with hardware and application mismatch, because not all HPC applications can take advantage of that many GPUs, especially when you get into who's got more than 4. You've got 11% who have more than 4 accelerators per node in broad usage. 9% are saying 8, 2% have more than 8. We looked at the 10s and the 16s. So that was interesting data to look at there. And then in terms of the current and future breakdown, currently, over 90% are NVIDIA GPUs. So I try to say accelerators, but let's be clear. This is an NVIDIA GPU dominated market. The interesting thing is, where's the growth going to be going forward? And AMD Instinct is getting a lot of uptick with Instinct. Now, the whole market is growing. So this isn't to say that NVIDIA is shrinking, but when you redo the mix, AMD is poised to make some significant gains with Instinct, not to where, NVIDIA isn't dominant. Even that future look has over 80% NVIDIA GPUs in a growing market, but we are going to keep monitoring this transition. We also have similar charts for CPUs and looking at Intel x86, AMD x86, what's going on with ARM, what's going on with RISC-V, what's going on with power. We've got data on all of this, but I want to withhold some of that for our clients for the time being. And then we talked about that mismatch before. 15% of the people with accelerators say the accelerators are not highly utilized. 30% are saying they're not as highly utilized as expected. A third are saying the accelerated nodes are compute islands that are not easily accessed by other systems. So this is maybe a little detail behind that hardware and application mismatch possibility that we saw on the other chart. All right. Final thing I'll touch on before I get to questions. We just completed our annual budget map survey. This is very important data for our market sizing and forecasting, where people tell us not only what their budget did year over year, but most importantly, how it breaks down between hardware, software, staffing, facilities, cloud computing, and items within that. All right. Is that server hardware? Is it storage hardware? Is it networking hardware, et cetera? Or what kind of software, what kind of facilities? So we break down all those categories. We can also cram in a couple of different related things, like we looked at CapEx versus OpEx, how much is committed spending versus utility spending, on-prem versus off-prem. And a big thing we wanted to look at was, COVID effect and also supply chain disruptions in 2021. And we build all of this into our market sizing. It's a very important consideration. Some of the headlines, note the footer I put on there, pre-publication subject to change on all of this, because we're still really just digging a survey that just closed. We might find a few other rows we want to throw out, so some of the statistics can change. But total HPC budgets, pretty consistent. Looks like total HPC budget spending up about 4%, but 4 to 5% year over year. Now, machine learning is going to add to this a little bit, where the budgets are distinct or overlapping, which is to say machine learning is adding in ways that now are not entirely contained to what we would think of as an HPC budget. And Dan and I have to discuss where that's part of the market model and where it's not. So the total market size you might see go up by more than 4%, also due to the cloud effect not being totally captured in a traditional budget map survey. Now within that, the servers, the HPC servers, are underperforming the rest of the market. This is consistent with our supplier analysis so far. It has been affected by supply chain disruptions and servers falling as a percentage of hardware spending, particularly among commercial HPC users where we have cloud spending up quite a bit. The supply chain issues did affect the market, particularly late in the year, and cloud had another year of really explosive growth. I would say, I'm not ready to put a firm percentage on it yet, but it looks like I think it's almost certainly north of 50% year over year. Give us a couple more weeks to put a number on it. And that's fueled by ongoing uncertainty in the market. When you don't know where things are, either because of COVID or supply chain disruptions, cloud helps with that. Cloud does well with uncertainty. It helps take risk out of the equation. And that's what we're seeing here. Supply chain issues, which I promised. Steve asked for this specifically, and I got it in, Steve. Here you go. This is fresh off the presses. 20% of respondents say supply chain disruptions affected their ability to spend their full budget in 2021. Now, that doesn't mean we only got 80%, okay? Because they might have had only a slight shortfall, but 20% said agreed with the statement about supply chain disruptions affected their ability to spend their full budget in 2021. We looked at where was it a minor problem or a major problem: delays in system deliveries, delays in peripherals, delays in components. And that look at that last column, inhibited my ability to spend my complete budget. That's pretty close to the other chart there. We try to ask the same question a few different ways. And so if you get the 17% saying, yeah, that was a major problem, plus a few saying it was a minor problem, that's consistent because minor problem doesn't mean I couldn't do it, right? It might have made it harder. But we look at where there was an effect. And then we also had additional statistics around where the underspending came from. More than half of the underspend was hardware related, as opposed to other areas like staffing. Could be, I didn't get to hire somebody, or software, right? But more than half of the budget underspend was hardware related. So we have the data to help us calculate how much of a budget hit was there in Q4. Most of it, users reported, comes back as 2022 budget. A minority of it is canceled. Some of it doesn't come back at all. Most of it rolls over into 2022. And that's all going to be part of our total market model. So what you'll see from us, this is the revised forecast guidance we gave late in 2021 was that we weren't going to hit the original 2021 forecast of the rebound year for COVID because the COVID rebound wasn't there yet. We still had COVID, plus we had supply chain issues, plus we had some Frontier didn't come in 2021. So we lowered that forecast guidance to +6 to +12 without a change to the 5-year outlook. I would now say we're going to be in the lower half of that range, a lot closer to the +6 and the +12. And that's on this. I'm going to kind of skip through this so I can get to Q&A. The servers are going to be more in the flattish range in the -2 to +4. And we've done our preliminary supply side guidance on that as well. But we'll have plenty of time to announce that later this quarter. You can look for another webinar from us prior to ISC in the late May timeframe before Memorial Day. We'll have a webinar where we'll be able to give some of the high-level guidance around that. But what to watch for that I'm ready to say already about that upcoming market report that we'll have out to clients by the end of this month. The HPC market will be up, but without a COVID rebound. We lost the COVID rebound. That's lost. HPC servers within that is going to be pretty flat. Cloud spending will be way up. To the extent that cloud will begin to have a significant effect in hardware spending over the 5-year forecast, it's really going to be hurting the hardware spend because more of it is going to cloud. We are going to this year publish both a traditional HPC market view that conforms to the way we've been doing it, as well as an expanded view that looks at enterprise AI spending that is outside of HPC budgets, as well as the full effect of hyperscale. We have done hyperscale market sizing and full AI market sizing in the past, but it's really time to put them together again into a consolidated view in order to underline how much revenue there is in the hyperscale side and how much it's dominating AI. We've been saying this, but I almost feel like people aren't hearing how much money is in the hyperscale market. And we need to make that clearer to people, how much spending there is at Google and Microsoft and Amazon and Facebook and Apple. And also, I'm choosing the word hyperscale, not cloud here. They're not the same. Yes, the major cloud providers are hyperscale companies, but there's a lot of infrastructure that goes beyond the cloud computing infrastructure. Amazon is bigger than AWS. Microsoft is bigger than Azure. Google is bigger than GCP. And then you get into other companies like Facebook, which have enormous IT spend that aren't enterprise cloud service providers either. Apple is a cloud provider, but they're a consumer cloud provider, not an enterprise cloud provider. And again, Apple is a lot bigger than iCloud. So when I talk hyperscale, yeah, cloud is included in that, but hyperscale is bigger than cloud. We'll be able to make that point a little more clearly. All right, that has gotten me to the end, other than give a plug for our Winter Classic Invitational student studio update shows and student cluster competition. This is nearing its end. The teams are finishing up their final technical challenges with AWS right now. Doing open foam simulations. Then they're going to do the team interviews next week. 1 week from today, we will have the final gala finishing it up. Tennessee State University has been impressive, going wire to wire in first place so far with 2 challenges left. But then 2nd through 6th, very dense. This is a special virtual student cluster competition that Dan Olds spearheaded starting last year. We're continuing this year, specifically reaching out to historically Black colleges and universities and Hispanic serving institutions to get a more demographic representation there for HPC. Please follow along with our studio update shows. Check out that website, winterclassicinvitational.com. And there's been a lot of coverage as well in HPC Wire. Okay, that is it. You can work with us a lot of different ways. I'll leave that up for a second, and I'm happy to take questions.
Thanks, Addison. Great presentation as always. I do have one question come in here. May need a little work in terms of deciphering it. It's pretty simple. Future for OpenCL, TPU, QPU, DPU. So I'm trying to decide.
Future for OpenCL, TPU, QPU, DPU. Okay, so OpenCL programming model, and then different sorts of other processing elements, tensor and quantum, and NVIDIA has, Mellanox has their DPUs. I'll take the second part first, which is all of those different processing form factors. They're all growing, right? And what we're looking at is to what level they're getting integrated as part of an environment and how much of the computation they take on. I'm hoping it doesn't completely break our model where we need to start counting them as separate processors, but they are all there, and they're different sorts of things. DPU is more of an in-network accelerator. Quantum is going to be a different type of CPU replacement, although it can be used as an accelerator as well. And tensor cores, those are going to be more aligned to AI and hyperscale right now. Quantum is the one I'll pick out and say I've heard a lot about it recently, particularly the Euro HPC summit that I was at a couple of weeks ago. There's going to be a big investment from the Euro HPC joint undertaking in the development of quantum as an accelerator for supercomputing. And Atos, for example, was talking about their Bull-Sequana architecture as being ready to have a quantum accelerator built in for it. So I think that is something we're going to start to see within the forecast period. OpenCL, I don't know how to predict this race is the thing, because along with all of these different processing elements are the programming models that go with them. Intel is investing a lot in one API, and Intel has been the number one provider of both middleware and developer tools to this market for years. But now they're in competition with CUDA and everything that's gone on with GPU acceleration, which I've already shown has been completely dominated by NVIDIA, and with a 15-year now first mover advantage with CUDA. So now AMD is going to try to be a tweener and say you need to get things into ROCm and OpenCL, use HIP for translation, and be more of an open standard. I think, though, really what's happening is you're going to continue in the short term to see more specialization and less generalization. There's still room for that pendulum to swing a little bit to where the start of the Beowulf era, the nice thing was portability. You get into MPI once and then everything's basically the same. We're now almost at the zenith the other way around into specialization, where clusters are all different. And you port to one cluster and it is not portable then to a different cluster. You're on one sort of thing. And that's a pendulum that swings slowly back and forth over time, but we're still pushing a little more toward into that specialization end. So that's what I'll say about that, and then I'll stop.
Okay, thank you, Addison. That was the question we had in. If there's any other questions that come, I'll definitely forward them your way.
All right, thanks very much. Happy to be here as always.
Thank you, Addison.